From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, I'm David Weston. Welcome to Balance of Power, where the world of politics meets the world of business. We're going to check with the markets right now with Abigail Doolittle. So, Abigail, I see the stocks slightly up, although the Dow is flirting with flat. Very different from the results yesterday, yet what is different in the outside world?
Great question, David. And the answer is not much. We have traders really looking past what we knew yesterday, increased lockdowns in Europe, fears around the virus, what it could mean for the economy. So yesterday, the S&P 500 closing down 3.5%, the worst day since early June. Today, right now, we've had wild trading action. The S&P 500 opened higher. It was down 0.3%, up 1%. Now it's up about 0.7%. So it seems that anything is possible for stocks on the day. You have some technology strength, though. Investors choosing to be optimistic about Apple, Facebook, Alphabet, Amazon reporting today after the bell. So those stocks, which were the weakest yesterday, this year's defense, those tech and big internet companies, that was the worst sector yesterday. Today, investors bidding those higher into earnings. One note, though, something that's not different today than yesterday, supporting the idea that fundamentally nothing has really changed either. Again, investors just sort of looking past it. We do have a lower low on the S&P 500. That tells you the sellers are out there lurking. But you also have oil down sharply right now, heading to the worst week, David, all the way back since April. So commodities, another risk asset, down in a big way still.
Well, to add one further complicating factor, take a look at the 10-year. Actually, we're now back up above 80 basis points again. So that's sort of a risk-on sort of reaction, sort of like stocks. How does that fit with commodities?
So great question, David. And yes, so you have bonds selling off a little bit today. The 10-year yield back in the top part of this year's range, suggesting maybe it's going to make a move for 1% or so. That would be risk-on because it would mean that investors going out of bonds, although in a strange way could also pressure stocks. But on the week, bonds are rallying. So on the week, we have a big haven bid. We have a big haven bid for the dollar. And on the week, the Dow heading and the S&P 500 heading to the worst week since March. We also, again, have crude oil down in a big way on the week, the worst week since April. So overall, right now, it's risk off, even though today feels like there's a little bit of a reprieve after yesterday's big sell-off.
Okay, Abigail, thank you so very much. That's Abigail Doolittle with that report on the markets. Let's come back to the election now. Every 4 years, investors try to position themselves in advance of an election, projecting who is likely to win and what they are likely to do. And this year is certainly no exception. Welcome now, Michael Zezas. He is Morgan Stanley Chief Strategist for Munis and U.S. Public Policy. Michael, welcome. I raised all this because you have done a survey of investors in advance of this election. Tell us what you found.
Yeah, it's interesting. We've been surveying investors all along here, and not surprisingly, I think when we first started surveying investors, they were most reticent, most cautious around the idea of a Democratic victory. And while I wouldn't say consensus has totally swung in the other direction, the outlook appears to be quite a bit more balanced, and it does seem to be centered around the idea that a Democratic victory where they take control of the White House and both chambers of Congress probably leads to substantially more fiscal expansion. But, and I think this sort of dovetails on what you just mentioned about the 10-year, interestingly enough, while that seems to be the position of most investors, they're not necessarily positioned for higher yield on that outcome. So we don't think that that outcome is necessarily in the price here. Importantly, I think one key view of our strategy is that we think there's sort of more distance to go on bond yields rising from here before Inauguration Day, if that were the outcome.
So does this all amount to some form of a reflation trade if, in fact, Vice President Biden gets elected as president?
Probably is the answer, right? So I think there are some conditions in which that maybe wouldn't be the case, or it would be more difficult to get there. So one concern that we have is that it could be quite a bit more difficult to get fiscal expansion through in a timely way without pressure from economic data or the markets if Joe Biden wins the White House but Democrats don't take control of the Senate, that there could be some substantial disagreements about the level of spending. We've obviously seen Republicans in the Senate already have balked at the levels of spending that congressional Democrats in the White House appear to have been interested in doing. So I think in that configuration, it would be a bit of a bumpier road. But in most of the other configurations here, including a status quo outcome where Donald Trump wins re-election, yes, more or less, it is that style of trade that we think comes through.
Michael, if we go back 4 years, I think it's fair to say the markets sort of got it wrong about President Trump because they were very nervous about President Trump. But then they took a hard look, I think, at the tax cuts and maybe the deregulation, decided they liked him just fine. What is the likelihood, in fact, the markets may be getting it way wrong this time again?
Yeah, and it's a good point, and this is why we always like to tell investors to focus on plausible policy paths, that there's a real difference between campaign promises and what can practically get done. If you asked me this question earlier this year, I'd say where I think the mistake was setting up was around the idea of a situation where the Democrats took control of the presidency and both chambers of Congress, because what we saw in our investor surveys then was that there was this substantial focus on the negative aspects of tax increases and regulation. What we seem to see now is there's more acceptance of the idea that Democrats are likely to pursue a heavy amount of spending because that's effectively what bridges the gap between the moderate and the progressive wings of the party. Higher taxes, there probably some of that comes along with it, but not sufficient to cover that spending. So you get a net fiscal expansion. So there's probably still some scope for a mistake if investors view that outcome too cautiously relative to, and very similar to 2016 with Donald Trump, where the net policy outcome of a Trump presidency and Republicans taking control of Congress was a fiscal expansion. That one was driven by tax cuts. This one we think would be driven by spending.
Well, and as you know so terribly well, Michael, it's not just a matter of who gets elected president, but what they can do once they're there. Let's assume just for a moment that Joe Biden does get elected. How important is the Senate? Because that seems to be a much closer call right now, according to the polls.
Yeah, it would certainly seem that way. The Senate's pretty critical because I think it represents the difference between a fairly easy path to fiscal expansion, including this COVID-19 relief stimulus bill, and a pretty bumpy one. If Joe Biden wins the presidency and the Democrats take the Senate, they have both the motive and an opportunity to pass a fairly large stimulus bill. The motive is pretty obvious. They started at $3 trillion. They're down to $2 trillion in this bipartisan negotiation. If they take control of Congress and the White House, there wouldn't necessarily need to be a bipartisan agreement, and they could take those numbers up. But if the Republicans keep control of the Senate, we've seen that they're even further away from the Democrats' numbers than the Republican White House is currently. It's unclear how that would resolve itself. Certainly, I think that you shouldn't conclude that it never would resolve itself, but that it might take a greater demonstration from weak market or economic data to persuade Republicans that they should come up higher to where the Democrats are. Because at this point, the position from many Senate Republicans is we're not so sure the economy needs this. And we're not so sure that we should be deficit spending when we've already expanded the deficit substantially.
Okay, Michael, always a pleasure having you with us. That's Michael Zezas. He is from Morgan Stanley. Coming up here, David Gitlin, CEO of Carrier, is here with his third quarter earnings as we look to HVAC companies like his to keep the air free from COVID in our buildings. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Carrier announced its strong third quarter earnings today, exceeding expectations for earnings per share and revenue, and it also upped its expectations for the rest of the year. Welcome now the CEO of Carrier. He is David Gitlin. So, David, thank you very much for being here. Congratulations, I think. It looked pretty good to me, at least as I read them. Explain to us what's driving this.
Well, thanks, David, for having me. The biggest driver was our residential HVAC business in the United States. You know, that business, it was a record quarter, both in terms of sales and EBIT. So that business was up 46% year over year. It was the best quarter that we've had in our 100-year history in residential HVAC. And at a Carrier level, all of our businesses saw sequential improvement from the second quarter into the third quarter. So we're seeing very strong progress overall. At a Carrier level, sales up 4%, EBIT up 6%. We saw strong incrementals in the quarter. We've really done a nice job at controlling costs, but also investing in growth and taking share and really being aggressive at winning across the portfolio. So frankly, a very encouraging quarter.
So, David, if you can break it out this way, how much of this residential HVAC business is because of new building, that is, the housing industry is doing pretty well with low interest rates, and how much is upgrades? Because you and I have talked before about the fact that really upgrading HVAC can help on the COVID issue.
Yeah, we're about 75% of our business is replacement, 25% new. The new construction piece has continued to be extremely strong, and we benefited from that because we really have outsized share on the new construction side. On the replacement, we are seeing continued phenomenon around. Clearly, it was a warm summer, especially June, July, August. We are seeing more people work from home, put additions on their home so they have a different space for their workplace, for their workspace at home. And it's really become a priority item for people to invest in their homes, but certainly invest in air conditioning in the summer and then heating in the fall. So it's been positive trends across the board for really record numbers.
What about offices? Because a lot of people, at least some people, are eager to get back into their offices out of working from home. And you and I have talked about the fact that really having a higher throughput of the ventilation together with some sorts of filters can actually screen out the COVID virus, as I understand it.
Yeah, it's critical that office managers give their tenants confidence to get back into the workplace. And it's going to come from spacing, but it's really going to come from ventilation. So we're investing a lot in filtration, new ventilation to kind of increase the airflow. And a lot of it is not only improving the indoor air quality, it's also giving customers confidence that you have improved the indoor air quality. So it's making it more visible to the tenant that if you look at all the different elements of IAQ, that they're actually tracking to what would be a gold type level.
Another thing that I noticed in your earnings, which caught my eye, was you're working with Amazon Web Services for temperature-sensitive cargo. You've got an operation there. And that what brings to my mind, at least, is vaccines, because some of the vaccines we're talking about developing really have to be kept pretty cold.
For sure. They need to be kept cold, depending on what vaccine you're talking about, either minus 20 degrees or minus 80 degrees C. And the challenge that you have is not only are you going to need tremendously more capacity in the overall cold chain globally, but you also have a series of handoffs as the vaccine goes from one step to another. Every one of those handoffs presents a problem where you may lose that cold chain, which is so critical that it be kept cold throughout the entire cycle. And then it needs to be administered within 6 hours of hitting room temperature. The partnership with AWS provides one single source of the truth throughout all of those handoffs. Once you have all of the data on a single cloud-based solution, which we're calling our Link solution with AWS, now you can apply machine learning. You can understand how long that the door in the cab is left open. How will that affect the efficacy? Or you can look at weather patterns and impact that makes. So get all the data in one location, use machine learning and AI to better analyze the data to provide more holistic solutions.
How much of the wind in your sails is a result of COVID, whether it's residential HVAC or it's cold shipment, things like that? And I guess I ask that because goodness knows it doesn't look like COVID's going away anytime soon, but we assume it will at some point. Is this a matter of just a year or two, or do you think there's more sustainable growth over the longer term?
More growth over a sustained period of time. You know, when we talk about indoor air quality, for example, one of the questions we got is that whole phenomenon go away once there's a vaccine for COVID? I think it's the exact opposite. What COVID has done is shined a light on the criticality of indoor air quality. We spend 90% of our times indoors. So if you're 50 years old, you spend 45 years on this earth indoors. And people often ask about outdoor air quality, but not often about indoor air quality. So whether you're looking at vaccine type filtration systems for things like COVID, or you're looking at other things that affect indoor air quality, if it's going to impact asthma or allergies or other things, the focus on indoor air quality really is here to stay.
David, we know Carrier well here in the United States, but you are a global business. Tell us about China and what's going on. You've got a substantial operation over there. How is it going? And has the strain in relations to the United States and China affected your business?
No, it hasn't. You know, we produce in China for China. Our orders were up 10% in the third quarter. It's really been the strongest sustained market that we've seen over the last 2 quarters. So we have a really strong presence in commercial HVAC in our fire and security portfolio and refrigeration. You know, if you look at China, we go back to the cold chain, less than 40% of the meat in China gets distributed in a cold chain fashion, but in the United States, it's more than 90%. So the opportunity for growth, really accelerated growth on things like smoke detectors or cold chain solutions, of course, HVAC systems is really phenomenal. And our relationship with China in China has been superb.
So Carrier actually is a relatively new company as a standalone company, as you know, and you are a reasonably new CEO as head of that standalone company. As you look at your portfolio now, some of the things we've talked about, I'm sure some things we haven't, where do you see the greatest strategic opportunities for your company going forward?
Yeah, it's really our overall strategy at a carrier level is focused on healthy, safe, and sustainable building and cold chain solutions. So as we look at bolt-ons, they all tied into those two ecosystems, buildings and cold chain solutions that cut across healthy, safe, and sustainable. There's one unique area within the HVAC space where we're a very small player in a very big market. That's variable refrigerant flow space, primarily based in Asia. It's a ductless type solution that we should be a bigger player in. That's an area that we continue to focus on. But anything that rounds out our portfolio as being the world leader in the ecosystem associated with healthy, safe, and sustainable building and cold chain solutions.
Are you in the market for some acquisitions or mergers?
We are. I mean, what we would look at is really bolt-ons. I mean, we just reviewed our long-range plan with the board, and we feel very confident in our ability to create significant shareholder value by putting our heads down and sticking to our plan. We talked about taking cost out. Originally, we called it Carrier 600 million of cost takeout over 3 years. We just renamed it Carrier 700 because we're running significantly ahead of plan. Our cash performance has been significantly better than we had anticipated. We came out as a public company in April with 1.3 billion on the balance sheet in cash. Today, we're sitting at 3.8, so we're going to pay down $1.5 billion of debt here in the fourth quarter. And we see a great opportunity for organic growth. So our focus is executing on our game plan. We will do some bolt-ons here and there, but our focus is executing on our organic plan.
David, thank you so much for taking the time to be with us today. Really appreciate it. That's Carrier President and CEO David Gitlin. And we turn now to Mark Crumpton for Bloomberg First Word News.
David, thank you. President Trump and Joe Biden are both appealing to last-minute voters in the battleground state of Florida. The two will hold events today in Tampa, hours apart. Without Florida's 29 electoral votes, the president's path to winning a second term would be exceptionally difficult. The UK's opposition Labour Party has suspended its former leader, Jeremy Corbyn, after he failed to fully accept the findings of a report into anti-Semitism within the party. Labour faced repeated accusations of anti-Semitism under Corbyn's leadership. Labour leader Keir Starmer said it was, quote, a day of shame for the party, and he vowed to win back the trust of Jewish members, staff, and politicians. Greece will tighten restrictions after the country reported 2 straight days of record increases in coronavirus cases. Another 3 regions will be placed on lockdown. Face coverings will be mandatory both indoors and outdoors for those areas, and a nighttime curfew will be imposed. The Prime Minister said unlike the lockdown in the spring, shops and schools will remain open. The World Health Organization says the coronavirus pandemic has reached what it calls an alarming juncture in eastern Mediterranean countries. The WHO says the area is seeing its highest weekly COVID-19 numbers since the beginning of the outbreak. Officials say more mask wearing and social distancing are needed in the region to help stem the spread of the virus. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. Still ahead, we talk exclusively with Speaker of the House Nancy Pelosi about what the country needs economically and her plans to get us there. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's time now for a check on the big tech companies. They're going to be reporting earnings after the bell today. Joining us is Scarlett Fu. So this is a big day for tech, Scarlett.
It's a massive day for tech, and it's a massive day for the stock market overall, given how big of a role tech plays in the market cap of the S&P 500. Now, yesterday's broad market retreat gave way today to a bounce back. Investors certainly encouraged by the third quarter GDP print and improvement in jobless claims. And we've seen big tech play a starring role all all week. Yesterday, with the hearings in terms of price action, they led the way down, and today they're leading the recovery. Investors, as you mentioned, waiting for results from 4 of the 5 biggest names: Apple, Amazon, Alphabet, and Facebook. Also, if that's not enough, Twitter is also due to report after the close. These names are gaining as results from smaller social media networks in recent days showed the online advertising market is doing just fine. In fact, it's thriving. And one of those names I want to highlight is Pinterest. It gapped higher at the open, and there's that big vertical line up today and is now at a record high. Third quarter revenue topped the highest analyst estimate, and monthly active users rose more than expected, up 37%. Now, Snap's better than expected results last week led Goldman Sachs and Bank of America to upgrade Pinterest, and you could see that move higher back on the 21st. So there's certainly a lot to be excited about if you look at some of the smaller players, David.
Yeah, the question in my mind, Scarlett, is can you get too excited, particularly when it comes to ad revenue? We saw that hearing before the Senate Commerce Committee yesterday talking about possible regulation of some of big tech. And one of the facts that jumps out is how much of ad revenue, and particularly incremental ad revenue, really is attributed to virtually 2 companies. It's Google and Facebook. Is there a danger that as they are too successful, then they might get some regulation?
That's always been the case, and that's certainly a headwind for the industry going forward, but it's not going to happen immediately. I mean, these things will take a lot of time. And for now, the picture is pretty good. Overall ad revenues expected to halt their slide from the first half of this year. So moving in the right direction. You're going to see probably a 12.5% sequential increase, and more importantly, up 7.5% from the third quarter of last year. The focus will really be on the outlook, and here we're talking about the more immediate outlook, David, whether ad revenue will be on track to match, if not top, the fourth quarter of 2019. Now, if the companies, for one reason or another, avoid putting hard numbers on their projections like they did earlier this year, that would be a big blow to confidence. But as you mentioned, there's a lot of optimism baked into big tech share prices, so much so that when you look at how Alphabet's performed this year, up about 16% in 2020, that pales in comparison with the rest of these big tech names, which are up anywhere from 30% to 70%. Of course, when you look at the market overall in context, the backdrop is that without the price action of big tech, the market would be in a very different place. The rest of the S&P 500, excluding the 4 companies due to report today, has seen market cap down collectively by $1.3 trillion, whereas the 4 names, they've seen their market cap swell by almost $1.7 trillion.
Yeah, and as you say, Scarlett, it's a huge, huge day for big tech. No question about it. That's Scarlett Fu. Thanks so much for that report on tech. Coming up next, we're going to have an exclusive conversation with House Speaker Nancy Pelosi on the way forward on stimulus talks. Are they really dead? Could they come back? We'll also talk about the 2020 elections and much more. This is Balance of Power on Bloomberg Television and on radio.
This is Balance of Power. I'm Guy Johnson. Stocks finishing up their day here in European trading. Another brutal session. The news flow just kept on coming. I think the first takeaway you really need to take from this chart here is that European stocks did not bounce today off yesterday's horrible, horrible price action. We finished down by 0.2%. We'll go through the auction process, but as you can see, this is the last 5 days. This was the session yesterday, this big drawdown. Today, we didn't bounce back. That is significant. Pay attention to that. So over the last 5 days, we're down by 5%. We did see a little bit of a bounce back around Christine Lagarde's press conference today, but it really didn't do much to take European equities higher. So a flat line there. Let's talk about the individual markets and just show you the differences that we're seeing across Europe. FTSE 100 down today by 0.2%, but the DAX after yesterday's session, at least holding its own today, up by 0.1%. A lot of action around the car stocks today over in Germany. That continues to be a key theme. The question is, with the lockdowns we've seen announced in both France and Germany, will car makers be able to continue with the business that they're doing with local dealerships? China very strong, but Europe looking a little bit weaker. Airbus out with numbers today. Strong, certain stabilization there. VW up by 2%. Nokia, the CEO there channeling his inner Mario Draghi, saying he'll do whatever it takes to catch up on the 5G front. And Credit Suisse really dropping the ball relative to what its peers have been delivering in a number of different areas, including what is happening with the trading story, where others have really dominated. Credit Suisse did not deliver today. Mr. Gottstein having a tough day when it comes to the share price performance. Then let's talk about the wider assets.
let's talk about the impact of the data we've seen on both sides of the Atlantic, that GDP figure we got out of the United States, and also that press conference delivered by Christine Lagarde, in which she appeared to commit to policy action in December. We heard from her maybe that actually we could see all options being considered. Does that include a rate cut? She talked about a recalibration of all of the instruments that the ECB has at its disposal. We did see the euro going down, 116.58, we're down by 0.7%. It's been giving back ground over the last few days. This is partly down to the virus. This is partly in terms of the policy response. In terms of what we've seen in terms of Italian yields today, we have seen an outperformance of the peripheral markets, as we certainly see that action coming through from the ECB. And the German two-year responding to that idea that maybe we could see a rate cut, that all options are on the table. Busy day in Europe. David, back to you.
Thank you so much, Guy Johnson. Yeah, back here in the United States, we are trying to bounce back a little bit in equities, with now NASDAQ up about 1.33%, and the others, Dow and the S&P, also up, although a little bit less. We welcome now a very special guest. She is Speaker of the House of Representatives, Nancy Pelosi. So, Madam Speaker, thank you for being with us again. Really appreciate it. We've heard you say that given what's going on this week in the stock market, maybe not today, but this week, with it being down, maybe that would be a message to the President of the United States that he should really come back and with a more affirmative response on the stimulus bill. Today, we got news about the GDP numbers in the United States, which were a record up. They were up 33%. Does that make you think maybe we may not need the stimulus quite as much as we did?
No, in fact, it is proof that we need the stimulus even more so. The reason we had a better second quarter than was a better third quarter is because what we did in the CARES Act and the following subsequent legislation for PPP that put money into the economy. Now people are coming. That's going to wear off, and we need another infusion. So it's not a question of we don't need it. It's a question of it proved that it worked, and now we need it more. But understand that what happened in the second quarter was so horrible. You know that. So we've come part of the way back from that, and we have to keep on a path of going forward rather than sliding back by not having another COVID injection of funds into the economy.
So I'm very curious, because you have such an important say in the economy and how it's governed, where it goes. How do you make sense of the numbers? Because, as I say, the GDP number really came back strongly. The stock market, although it's down this week, actually has been doing fairly well over the last few months. At the same time, we have 11 million people still unemployed. We still have stories of people having extreme difficulties. Do we have two economies going on in this country?
Well, let me just say that the number I think that is staggering is that we have more people unemployed and more people on unemployment benefits than any time in our country's history. We know that the Fed is shoring up the market so that the stock market can do well. I don't complain about that. I want the market to do well. But just because we've come back some points this morning does not negate the fact that we're, almost 1,900 points down for the past 4 days. So the Fed is reacting to the fact that the virus is spreading. The Fed is reacting, the markets are reacting to the fact that the virus is spreading. It's reacting to the fact that there is no agreement to inject the resources necessary to support the livelihood, and the life of our democracy, as I say over and over again. So we do need that public role once again. Right now, and when we need it for state and local government, according to the Wall Street Journal, said that this is the biggest cash crisis for the states and local governments since the Great Depression. So there are all kinds of things that, some people may brag about an indicator saying this, but we have to wonder what it means in the lives of the American people. And all of the things that we have in our legislation are stimulus to the economy. They are stimuli. If you're talking about unemployment insurance, if you're talking about food stamps, if you're talking about direct payments, you're talking about all of those things, what we want, an earned income tax credit, child tax credit, they all are stimulus. People will spend because they need to inject demand into the economy, create jobs, rather than what it does for a trickle down to have $150 billion going to the wealthiest people in our country. And that's kind of the discussion that we're having. But we have to act. We're at a fork in the road because the path that the president is taking us on has been deadly. When you think that nearly approaching 9 million people affected, nearly 250,000 are dead from this, 8 million people falling back into poverty because the CARES money is running out. Right. 17 million children food insecure in our country, millions of those families on the verge of eviction. The list goes on, and the virus continues. We have to crush the virus in order to open the economy and open our schools. The president has taken us on a deadly path. We have to go down a different path that is science-based, that is adequately funded, and is geared to opening the economy as well as our schools and creating jobs for our people.
And Madam Speaker, you've talked repeatedly about crushing the virus. That's the word you use. And an important part of the package that you were putting forward included money for testing and tracing and things that are important to get that done. I know you've still got your door open, as I understand it, at least figuratively, to a possible deal. It looks unlikely at this point, at least since before the election. Talk about the lame duck session. Is there any realistic prospect really that this could get done in a lame duck session?
Well, I think so. I think that last weekend when the chief of staff to the president, Mark Meadows, said, we're not controlling the virus, he confessed that they never intended to do so, that they called it a hoax, that it was going to disappear miraculously, magically, and the rest. And what has happened? People have died. And so, again, that recognition that they have surrendered to the virus and we are not. We're there to crush it. Now we can go to the table with a clear understanding in the public mind as to what we need to do. And I had hoped that we could at least have an agreement before the election, but they have not ever responded to, we'll come, the secretary and I will come to a place of, all right, this is where we could be, but we've never gotten back. 2 weeks ago today, the secretary said that they were willing to accept our testing language with a light touch in the language. The light touch happened to be erasing 55% of it, largely in communities of color who are dying at a higher rate than people who are white. You've heard me say over and over, children who are Black or Hispanic have more, 5 to 8 times more possibility of going to the hospital with COVID than white children. So they erased all of that. I don't know, it doesn't make sense. So now we're saying, okay, you confessed to not controlling it. You understand that we must. Just give us an answer as to whether you agree that we must follow a scientific path, or we're going to continue to go down the quackery path that the president has taken us thus far. So we sent him a letter, which you've probably seen, just said, here are just some of the answers we're expecting. We don't expect them all to be in our favor, but we do expect them to establish a place where we can weigh the equities and come to compromise and negotiate so that we can go forward. And yes, I do think that the president has said we would have an agreement after the election. Of course, he's predicating some of that on the Republicans taking back the House. You just keep thinking that, Mr. President. But is as delusional as you have been in your approach to the coronavirus.
Madam Speaker, let's take it even a step further, because it's obvious the stimulus package is very important whenever it gets done. We assume it will get done at some point. But more broadly, what is the basic approach that the Democrats have to the economy? We have a sense of where President Trump would go. Let's assume, and it's just an assumption right now, that because of the election, the Democrats, come January, have it within their power to implement their economic agenda. You understand this economy so well. What would be your priorities, particularly to get those 11 million people back to work? How do we do that?
Well, jobs, 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 a 4-letter word that is the answer to many concerns in a family or in an economy. When we ran and won in 2018, we had a simple agenda, and we continue to have it. For the people, we will lower the cost of health care by lowering the cost of prescription drugs and preserving the pre-existing condition. And that is central to the economic success of a family, so they don't have health care costs that are debilitating to them. For the people, we would increase paychecks by building infrastructure in a green way to take us into the future. Joe Biden calls it Build Back Better. We called it Moving America Forward. But that will be central to job creation. And for the people, we will have cleaner government by reducing the role of big, dark, special interest money to influence decisions. Now, let me just say, as a matter of history, an example, in 2008, when President Obama was elected, we immediately in the transition put our plan together to take us out of the Great Recession that was caused by the meltdown in the financial industry. And so as soon as we took office, which would be the first week in January, we began that legislation to ARA, the American Recovery and Reinvestment Act. By the time the president was sworn in a couple of weeks later, it wasn't long before he could sign that, which would save or create 4 to 5 million jobs. We'll have to have something like that from the start. That's why we would hope to take care of a lot of the costs that are associated with the virus right now in terms of outlays by state and local government, as well as revenue loss because of shelter at home and other initiatives like that. So we very much, as I say, for the people, we want to have this so that we can save their lives, their livelihood, and the life of our democracy. But for the country as well, we want to get some of this done so that we can move on to how we grow the economy. How different we'll be from the Republicans? They're trickle down. It's always been trickle down. It's never really worked. It's always cost money. And we are bubble up. Just put money in the pockets of the American people, job creation that will, again, grow the economy in a way that recognizes that we are a consumer economy. And the more people can purchase, the purchasing power, as well as save, the better off we will be as an economy. So this is for the people, but it's also writ large for the economy, and to do so recognizing that the strength, economic strength of our state, the fiscal strength of our state and local governments has an impact on our economy as well.
Madam Speaker, your caucus is a rather big tent, if I can use that word. You have some, for example, freshman members of Congress who are more moderates, more favorable to business. You also have some more progressive. You have some members of your caucus on the progressive side say they think that Joe Biden is going to move to the left, too progressive, if in fact he's elected. Are you confident in your ability of trying to steer that course? Because you've got a pretty wide range of views when it comes to economic regulation.
Well, we do have a beautiful diversity in our caucus in every way, and we welcome that exuberance. Joe Biden will be the president of the United States. He is a progressive Democrat. He may not be to the left of some of the people that are speaking out right now, but I have no doubt that he will govern in a way that brings people together, that unifies our country, that is respectful of all opinions, but actually is able to institute policy that will be sustainable over the long run. It will be in the tradition of the New Deal. And I say that in this way, not just be thinking in old ways, but the New Deal was about persistent, constant, bold, persistent experimentation. Let's think in new, fresh, entrepreneurial ways about how we address job creation and the health of the American people and the well-being of our children for their future. And so I see Joe Biden in that tradition, not to think in old ways, say, oh, the New Deal, that's an old way. No, it was a persistent, bold experimentation to think in new, fresh ways. And that will be the tradition. Put everything on the table, be agnostic. What really does work for the American people? Let's see how we can build bipartisanship, how we can build accountability, how we can build transparency, so that we are, this nightmare that we're living in right now will be behind us, and people will know that all of their views are respected, whether they voted for Joe Biden or not, because we are following the guidance of our founders that you've heard me say over and over, e pluribus unum, from many one. Couldn't imagine how many we'd be or how different we'd be, but they knew that we always had to strive to unify, to bring people together, to be one.
Madam Speaker, it's always a great privilege and pleasure to talk with you. Thank you very much for being with us. That's Speaker of the House of Representatives. She is Nancy Pelosi. Coming up, with just 5 days until the presidential election, we'll take a close look at the key swing state of Wisconsin with former Governor Jim Doyle. That's next. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. All this week, we've been taking a look at Wisconsin as part of our Swing State series. And today we welcome the former two-term governor, Democrat Jim Doyle of Wisconsin. So welcome, Governor. Good to have you with us. We want to hear all about your state, but I want to start with something near and dear to my heart, which is Big Ten football. Wisconsin had to cancel its game against Nebraska because of COVID. I think both the coach and the quarterback basically had it. Tell us what's going on with COVID-19 up in your state, because when I look at the map, it looks like there's a lot of it up there right now.
Well, we have been the center and per capita the highest, I think, maybe other than North Dakota now for 3 weeks or so. Our hospitals are filled. We've had to open up auxiliary facilities at the state fairgrounds for people. We are right in the middle of it. And I guess it's highlighted when Wisconsin football gets canceled. And not only the coach and the quarterback, but a large number of members of the team as well. So we're in very, very tough shape. And Wisconsin's a state where there's been a political battle. It's really the height of how politics get in the way of public health. The Governor Evers has worked hard at trying to have mask orders in place. The Republicans have fought him every step of the way. They have brought lawsuits against the Republican-controlled Supreme Court that has done away with those statewide orders, and we're paying the price for it now. Not that they would have done away with COVID in Wisconsin, but I think we would probably look very much like most of the average states. But now, unfortunately, we're leading the nation.
What's the public sentiment like about some of the steps that have been taken by the governor? I mean, in my home state of Michigan, across the way, the governor took some steps and was sued and things, but by and large, she's had a lot of public support for being pretty tough on the disease. Is that true in Wisconsin, or is it more evenly divided?
It's true in Wisconsin. I think the cultures of Michigan and Wisconsin very similar. Every public opinion poll shows that 70 to 80% of the people support mask orders and restricting particularly the very high spreading kind of businesses and large gatherings. On the other hand, there is no doubt there is a very strong and vocal chorus of voices, but very much a minority, but a very loud minority that sees this as an infringement on our freedoms and all of that kind of rhetoric that we hear.
So, Governor, how will this factor, if at all, into the election we're going to have next Tuesday?
Well, the beauty about elections, I've always thought, I've ran and won 5 statewide races, and what I always appreciated about a big campaign like this is that we'll find out. So we can all kind of give our opinions now, but in a few days, we're going to find out what's happened. I think there's no doubt, in my view, that this is the number one issue. Cuts both ways. There are people who feel very strongly that we should tough it out and open everything up, and that's definitely the horse that the president is riding on in this race. But I do think this very strong majority agrees that we should be finding smart ways to open it up, but doing it in ways that don't lead to more and more COVID, a greater COVID spread. So I think the majority is the polling which suggested very, very strongly that this is the issue of the day, and very much in favor of the idea that we should have a much more responsible approach to this than we've had.
Well, in your opinion, and you correctly say we don't know, we can count the votes and find out, but still we can speculate a little bit. In your opinion, knowing Wisconsin the way you do you think that that COVID reaction might make the difference between now and 2016? Because President Trump did win Wisconsin, albeit narrowly, in 2016.
I think so. It's hard to see how, even without COVID, he won such an unusual squeaker here it was like Michigan, by 25,000 votes. And if just half of, for example, if half of the fall off of the vote in Milwaukee, and the same is true for Dane County where Madison is, if just half of the fall off of that vote from 2012, Obama's last race, to 2016, if just half of that comes back, that more than makes up for it. And the absence of a third party, the third party votes more than made up for that difference. So I think President Trump was going to have a very, very hard time to win this state, even without COVID. But with COVID, there's no doubt he has very strong supporters, but most polls seem to suggest that pretty well caps out at 43, 44%. But again, this is all nice theory. We're going to find out in a few days.
Well, and staying with a form of theory, let's talk about those polls. We had that Washington Post ABC News poll that came out a couple of days ago that had the former Vice President Biden 17 points up on President Trump. As a professional, can you believe that poll? Doesn't it seem like it's pretty extreme?
Yes, and I think even the pollsters I think it was a good poll, well conducted and so on. But if you run 50 polls, all of them very well done, you're going to find a few that just just come out. You just happen to the people you called just happen to be a certain way. So yes, that seemed extreme to me. On the other hand, I do think it indicated that probably isn't a 17-point gap, but it's probably a pretty significant gap. I mean, 17 doesn't come out of nowhere. It may be off by a significant amount, but that's still a whopping margin. Another poll that came out about the same time showed it about a 5-point race, and that's kind of where the polls have been, 5, 6, 7. I would think that's pretty accurate, and I think that probably even closes some as you get to the final election day.
Well, it's going to be exciting, no question about it. Thank you so much, Governor. That is Jim Doyle. He's the former Democratic governor of Wisconsin. And be sure to check out our special on the swing states. That's airing Friday at 7 p.m. Eastern Time. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we're going to talk to Joe Livornia. He is chief economist for the National Economic Council. He'll have something to say about those dramatic bounce back in GDP numbers that came out just today. This is Balance of Power on Bloomberg Television and on Bloomberg Radio.